Welcome to Real Talk with Real Estate Pros, where we bring you exclusive interviews with the real estate experts. We'll delve deep into their journey to success and learn how to go the extra mile to serve their clients' wants and needs. Let's dive in. Here's your host, John Money McKinley.
Good morning, everyone. Welcome to another edition of Real Talk with Real Estate Pros. Thank everyone for being here. It's been a few weeks since we've been here, but welcome to the year of 2025. Got a lot of great information coming up on today's show. I have a special guest. His name is Mr. Greg West, and some of you that have been here before have seen Mr. West. He is my credit expert, and it is an honor to have him on here as our first guest of the year. But with that said, I'd like to bring on Mr. Greg West this morning. Mr. West, how are you doing this morning?
Pretty good, bud. How are you doing?
I am doing fantastic. How is the new year treating you and the family, sir?
So far, so good, other than being hunkered down in this winter storm that's going on.
Yes. Have you been lucky enough to avoid it, or are you guys getting hit pretty bad where you're at?
Oh, no, we're right in the middle of it. I haven't lost power, though, so that's good.
Well, that's a good thing, and hopefully nothing will get blocked out today.
Hopefully not.
Be careful on how much secrets on the credit side of things you reveal, Greg. That may may cause some problems for us. But, well, I really appreciate you having you on, Greg. And there's a lot of questions that go on from people as far as credit, what's going on with credit, wanting to find out more information about it. And I'm glad you could make it here today, because I'd really like to give you the opportunity to really dive into who you are and where you come from and why people should really seek you out if they've got some questions on where they're at with their credit. So if you could, please tell us and just share with us a little bit about yourself and how you got started in the credit repair industry.
Okay. It's kind of that ripple effect. So I'm going to tell you some things you probably don't need to know, but it kind of leads into how I got into the credit industry. But I grew up in Northern Kentucky. Believe it or not, a lot of my friends, family members worked for the IRS and whatnot over there in Cincinnati. So I thought that's what I was going to do. And
so you were going to be an IRS agent at one time?
Yeah, if you can believe that.
Don't hold that against Greg. He's been a great person. That's the first time I'm finding out about that after 20 plus years.
Yeah. So I wanted to get a business management degree. So I ended up getting down to Berea College, which is why I'm in Richmond today. That's a small drive down through there. And anyway, after 3 years, I ended up, they didn't have the student loan deals and stuff they have now. So I had to quit for a year to get some money to finish my last year. And I ended up getting in my own business. And I've been an entrepreneur ever since. And then what happened is during that business, I expanded, gotten some inventory, vehicles, and then crap started happening. It was right around 1994. I don't know if you were in the economy back then, but it was starting to get a little shaky. But anyhow, had some issues with vehicles, credit got wrecked, and a friend of mine recommended me to a guy that did quote unquote credit repair. So I was like, well, I got nothing to lose. So I went ahead and tried it. And it worked so well, I ended up working for that guy. I ended up stopped doing what I was doing and worked for him for 6-7 years, I guess, and learned the ins and outs of it. And for lack of better terms, we agreed to disagree on how things were being done. And I went out on my own and been in my own company now for about 22-23 years.
Oh, okay.
So I've been a product, kind of like the hair club. I've been a product of the not only the owner, I was a user. So I know how people feel when their credit gets wrecked, 'cause I've been there.
Okay. Well, that's great to hear. So basically you ran into some challenges in the mid 90s and caused a little bit of credit challenges, and you sought out a company that helped you with that. You went, "Hey, wait a minute. This is so good. I'd like to start helping other people out as well too with that."
Yeah. That's exactly how it happened.
Well, let's dive a little deeper and then too about the credit improvement side of things and share with us, how does your company assist clients in repairing or improving their credit situation?
Well, it always starts with analyzing their credit reports first. Every situation is different. So you're going to kind of want to, if they don't have a credit report, I show them how to get one. And then once I see it, if it's a credit building problem, I kind of teach them how to do that. If it's a credit repair problem, you can do some things online, or I still do things by paper. I'll actually file the disputes form. Basically, just try to do what I can to get scores as high as possible.
So wait a minute, you still use in some situations old-fashioned pen and paper?
Yes, I prefer it actually. I think it works better still.
I'd have to agree with you as well. I even have one of these magical things, sir. You know what these are.
Is that a pen?
That is a pen. To the audience out there on the younger side of things, this is what we call a pen, and there's several things you can do with it. One of it is cursive writing. That's like a foreign language to a lot of people today.
Yeah.
Um, well, speaking of foreign language, and let's talk about some myths and misconceptions about credit repair do you encounter most often? Because there's a lot of people out there, and me, myself, being in the world of mortgages, I've heard a couple of doozies from some folks about some myths on the credit side of things.
Yeah, and it only got worse after well, I can't even say the name of it, but the unspecified virus from the unspecified location. You got a lot of influencers and businesses that started up thinking they knew what credit repair was and whatnot. But probably the biggest myths is anybody who tells you 100% cleanup guaranteed 60, 90 days or whatever, they're just flat out lying to you. I mean, it doesn't work like that. That's why there's so many of these companies that are here today, gone tomorrow, make promises they can't deliver on. That's probably the biggest one, because there are no secret letters of way it's done or whatnot. It's pretty much submitting the dispute, having the proper follow up, and whether or not how the creditor responds is what happens with the account. If it's deleted, verified, updated, remains the same. There's no secret wording, secret letters. That's all just BS.
So wait
That's
a minute,
probably the
Greg.
biggest things.
You're telling me these posts that I see on Facebook of the magical improve your credit by 100 plus points in 30 days may not quite be all that accurate?
I mean, it's possible, but most likely not. It just depends how things go, what caused the 100 points. I mean, I've seen people get that in that quick a time, depending on now, obviously, a guy with a 700 score is not going to get a 100-point increase in 30 days, but a guy with a 400 or 500 score opens a couple credit cards, they report, get some items deleted, possibly get up to fives. So, yeah, it just depends on the situation.
Exactly.
Yeah.
And now, with that said, what are some of the biggest challenges that people are facing today when trying to maintain good credit, other than going through the bestest economy ever in the past 5 years?
Yeah, that's exactly what I was going to bring up. The two biggest challenges, and I know this personally just from, I've had to write this statement more in the last year than in all my previous probably 18, 19, 20 years combined, is people are living on their credit cards right now. And the higher that utilization gets, the more damaging it is to the score. And if you wait too long, you can't even refinance, borrow your way out of it if you have a home. And then the other is, of course, staying organized enough to pay your bills on time. People don't realize a 30-day late can just crush you. 100, 150 points lost overnight just because they forgot to pay it or just weren't organized enough to pay it. Hell, a lot of these people don't even know how to reconcile bank checking accounts anymore. There's just a lot of basic stuff. So I would say making payments on time and credit card debt are the two biggest issues right now.
Well, I'm glad you mentioned that as well, too, because that's something that, and I understand people are a little upset that the interest rates are no longer in the threes anymore. And whatever we're hearing and have been told, we don't see it coming back anytime soon as far as interest rates coming lower. And we'll dig into that more as the year moves along. But right now, there's really not a lot of indicators of lowering interest rates. However, when people take a look at their financial situation, take a look at what their credit cards have done over the past couple of years, with the interest rates on those going up, along with the debt they've incurred on it, there's a lot of times where you've got a small window of opportunity to be able to grab some of the equity out of your home and be able to pay off those credit cards. And I know a lot of people go, well, wait a minute. Now I'm going to go from a 3 or 4% interest rate to a 7% interest rate. And we're just picking numbers here. These are not specifically for anybody in particular. We're just picking numbers out of the air here for compliance purposes. We are not quoting any interest rates that you may or may not receive, but I'm just using these as an example. So, well, when you really look at the math and go, okay, if we eliminate $1,200 in credit card payments, or even up to $2,000 or more in credit card payments, and we only raise your mortgage monthly payment by $500 or $600, you are still in the plus. And that gives you, in a lot of cases, I have a lot of folks that I work with where they're able to get a savings of $1,000 a month. Well, in today's times, an extra $1,000 a month might actually be able to buy some groceries for a couple weeks.
Yeah.
But like I said, that small window of opportunity, because as you said, if you start getting slow pays, your credit score is going to go down very, very, very quickly.
Yep. And when you get over 30, 40% utilization on the cards, 50%, 60, and then it's probably too late.
Exactly. Especially here in Texas with what we call the Texas home equity loans, or a Texas cash out. The lenders are very, very picky on credit scores on if they will allow you to do a Texas home equity loan. We have a lot of peculiar laws here in Texas on the home equity laws, which some of them actually, quite a few of them are actually very protective for the homeowner, which is a good thing. Well, I'd like to kind of dig into now. Can you tell us a little bit about, what are the most significant benefits of having a high credit score right now in today's times?
Well, as far as from a homeowner perspective, it's you probably know better than I, but it definitely gives you access to better loans options. And then, of course, interest rates, which on big purchases, even on 25 basis points, can be a huge amount of money, depending on how many years you put things on. And also, unfortunately, it can affect job promotions, especially ones that involve national security, things like that, banks, even insurance quotes, unfortunately. Although it has nothing to do with your driving. But the higher the score just helps you around all the way with all kinds of options.
Well, that is a big thing as well with the insurance, because they do look at the credit, and the same thing with the government jobs. Just like with me as a licensed loan originator, my credit score is very important, and it just makes sense. If I'm advising people on financing of a home, one of their biggest, largest investments of their life, along with one of their biggest, largest debts of their life, I would hope that the loan officer or lender you're working with has a decent financial credit standing.
Exactly.
I mean, it would just make logical sense to go, hey, wait a minute. I want the guy who's advising me on this financial decision here to have his life in order, his act in order as far as the credit is concerned.
Exactly. Yeah.
Now, here's something that I do get a lot, because for some reason, my clients seem to be getting younger. I don't think it has anything to do with me aging, Greg. I really have nothing to.
Yeah, me neither. I think that every time I see someone born when the year I graduated high school. But anyway, go ahead.
No, it just still shocks me. I'm going, wait a minute. Your birth date is after my daughter's birth date. Wait a minute. This is. It was just a few years ago, Greg. My daughter was 12 years old.
Right.
Well, what advice would you give to someone just starting out, and on what they can do to really get themselves set right and have a great credit score?
Yeah, absolutely. And actually, I think one of the very first videos we did, I don't know, a couple years ago, I actually talked about this. I did this exact strategy with all three of my daughters. Now, you don't have to do the authorized user if it's not available, but generally, if a parent or a loved one can put the person trying to get the credit as an authorized user on one of their cards, preferably one of the older ones and the ones that has low credit card utilization, they'll basically inherit that credit line. So after a month or two and it reports, they'll have a score, which is the important thing. And then you want them to get they qualify for their own credit card, which there's all kinds of them out there. The one I put on my link as a website is a Capital One Platinum Rebuild, just because I've seen 560 to 590 scores get approved with it, and there's no annual fee. Uh, None of the interest rates on credit cards are going to be great. As long as you don't carry balances, the interest rates really don't matter because you always have that 30-day window. But if you do the authorized user, the credit card, now if you can't get approved for one of those, and you can get a secured credit card, same principle. You put a couple $100 down, then you get a credit card limit with a couple $100 on it. And from there, the next step is every one of them. A couple of them got a car after that, so they have an installment loan. They got a couple lines of revolving credit, and they're off and they're started. The important thing is just to not do something stupid and get a small collection here and there from not paying something. And that's how I got all three of mine started. And they had all of them got 700 scores within 6 months to a year. I mean, it was quick because credit's all about what you've done lately. So if you get off to a
Exactly.
good start, it goes pretty well.
And I, coming from the home lending side of things, can attest to it. A lot of your pricing, and when I say pricing, your interest rate, one of the major factors in determining what your interest rate's going to look like is your credit score. And I don't want to, this is not the show I want to dig into it too deeply, but with what's happened with some of the changes over the past couple of years, that's even added more into, hey, the higher your credit score, the less hits you're going to take on your interest rate. And this is why I'm glad that you were able to come on today and really help share this information with my audience, because this is very important, especially as we're moving into new times. A lot of changes I think are going to be happening, and hopefully we're going to start seeing a lot of better things moving forward. And in America today, a good credit score is one of your most important tools to have, whether you want to deal in real estate investing, whether it has to do with a job, or whether it has to do with wanting to buy your next home or buy your first home.
Yeah. And I'll add something else as far as young people. A lot of them haven't learned it yet, but literally everything you do is a contract. All that terms and conditions, the crap you don't read, you just click buttons here and there and the other. So be careful. Gym memberships, phone memberships, as far as sign up for services, cable. Just make sure if you sign up for something, you read the terms. If it's got a 12-month contract, 24-month contract, because you breaking that will make you liable for the whole amount, and that causes a big credit problem down the road. And when they stick it on your credit report as a default, so just
Oh,
just be
yes.
careful, man. With anything you sign, look at the terms because it can bite you later.
Utilities as well.
Yep.
I
Mm-hmm.
I just recently changed internet providers, and I won't go too deep into it, but I had paid my final bill, and actually I didn't need to pay it. And I was like, okay, they'll just send me the money back. Well, I got a bill saying I owed $35. I'm like, $35? The heck is this for? And then, of course, there was a mysterious charge. There was the money I sent them, and then there was a mysterious charge for $99. Then, of course, you go through the charming phone system in the phone tree and get sent over to Thailand. It seems to be where most calls are sent to now.
Talk to
Needless,
Bob.
needless to say, they were trying to charge me for an erroneous. Uh, had sent a technician to the house supposedly. After
Huh.
over 2.5 hours, I was finally able to get somebody here in the States, which even she looked at it, went, what the heck is going on? She goes, Mr. McKinley, this is taken care of now. I'm going to also have your $85 sent back to you. I was like, thank you very much. I appreciate it. But with that said, if I had just thrown that away, oh, this is ridiculous, whatever, that $35 would have gotten on my credit reports and probably hit me for, how many points would you say that a $35 collection would hit me for, Greg?
Well, it's not the fact that it's $35. It's the fact that it'd be brand new. I mean, you could have lost 50 to 100 points.
Yep.
I mean, again, it's how new the item is, not necessarily the amount. $500 collection, $30. Same thing happens.
And that's something I stress to people. If you are changing service providers, whether it's television, internet, telephone, gas, electric, you have to stay on top of it because they love to nickel and dime you to death at the end.
They do, especially returning equipment fees. I always keep when I send it in, I keep the tracking numbers. I mean, they say they don't get stuff, so yeah, you got to be vigilant.
Exactly. Due diligence, due diligence.
Yeah.
Well, I want to get into some industry insights here, Greg. How have you seen credit repair and financial education evolve over the years?
Ugh.
I didn't mean to open up a can of worms, sir. I'm sorry.
No, it's just it's going from paper to digital, obviously, and I think actually everything social is turning into that. Whereas people used to get information from bigger sources and newspapers and news, now they get it from influencers, is what they call them for the most part. So you got to be careful if they're trying to sell you something or what's going on. But and it's so hard to get good information because you don't know what they're peddling and why they're peddling it. Generally, anything online, the reason they call it the web is it leads to something else. Like if you're listening to a guy that's doing a video and they're recommending this, that, and the other, whether they believe in it or not, if you click a link to it, they're probably making something on the back end of it when you apply for it or get approved for it. A big example would be Credit Karma. They're constantly sending people emails, freaking them out to get them to log in, and then they're shoving something in your face that you need to apply for, which you may or may not really need to, but that's how they make their money. They're free for a reason. So that's the biggest thing. It's hard to get, because you can look up and you probably know this as well, especially with social media and whatnot. If you go looking for something, you're going to find information that's biased to what you're looked at in the past. So it's very difficult to get a contradicting opinion on something. So you just got to be careful out there. And I just tell people, do your own due diligence research and don't believe what anybody says, including myself. Look it up. You just got to find out what's best for you in your situation. It just, and when you get away from paper, everything happens faster. But that's the biggest thing. It's just hard to, now I do like the fact you can dispute online when needed. It's more convenient and quicker. But if you want it done, in my opinion, to work better, paper's still best. But that's my rant.
Well, okay. Well, then let's move to this next question, Greg. What role does technology play in helping people manage and maintain their credit in today's times, in the year of 2025 and beyond, sir?
Well, I mean, there's a lot of good to go along with the bad I just said. Some of the good things would be now you have easier access to see your credit reports now. You didn't used to have that. It used to be a pain. I mean, you can literally go to like annualcreditreport.com and have a credit report within 15 minutes and see what's going on, why you were denied. You don't have to wait on a letter. You don't have to make a phone call, wait on any mail. You can even dispute online and have it done a lot quicker. Although it takes the human touch out of it, you're doing a lot with AI and algorithms, who replies or not. I do like the fact that you can get into certain programs where you can do simulations about, if I pay this off or I do this, how will that impact my score before you actually try it, which can be helpful as well. But that's probably the biggest thing. So there's a lot of good information to go along with the bad I just talked about.
Okay. And it's nice that you say that about the simulation. Mm-hmm. I have the same similar type of tool when I have somebody apply for a home loan. When I'm reviewing everything, it will give me an evaluation of all three of their credit scores, but it'll also let me know if there's any room for improvement that's available. So let's say I'm working with somebody with a little bit lower credit score and I go, oh, wait a minute. We have the possibility to go from, I'll just pick numbers here, 619 which is just below 620, which is going to put you in a whole different category for a loan, and go, hey, we may easily be able to move you to a 640 or a 660, which changes the entire scenario on loan options, interest rates, and programs that are available.
Mm-hmm. Yeah, there's good programs out there for that.
Yeah, and I'm very happy with having that ability now too, because now I can really go back and have a plan for a client. They may or may not have the financial situation to be able to do what it takes to bring their credit score to that today. But when you're able to lay out a plan for them, which is a lot of what you do with people on the credit side, because like you said at the beginning, this is not a magic wand you're waving, is it?
No. And to further what you're talking about, like the program you're using, that's kind of, I do the same thing because I've looked at so many reports through 20, almost, let's see, 90, going on 30 years now, I guess. Sheesh. I've looked at so many reports, I can scan it pretty quick and see what can be done to enhance scores. Now, how much you'll get, I can't calculate all that, but I can give you a rough estimate. So, yeah.
And all just full disclosure here, I've gotten with Mr. West as well too on clients I'm working with. Hey, Greg, of course, with the client's permission to let Mr. West review the report. Greg, what would you recommend they do to get us the fastest move up? Because the difference in interest rate pricing is this. And I don't want them to be stuck with the higher pricing when just a few little moves can raise the score and put them in a different category as far as the interest rate pricing.
Yeah. Well, and the reason it has to be done is there's so many, even like the tri-merges, they've changed on you through the years. They're kind of difficult to read if you haven't seen hundreds and hundreds or thousands of them. In the same places where you pull reports from, whether they're online or paper, everything's formatted differently. So just having the experience of seeing all the different types of models and examples, it just makes it easier to formulate that type of information.
Well, exactly. Well, we're getting towards the end of the show here, Mr. West. And please, if you would, how can people get a hold of you? What is the easiest way if somebody wants to chat with you and get a consultation, they can reach out to you, Greg?
Okay. A few different ways. They can call me directly, 859-625-4546, or go to westcreditservices.com and click the little contact us button. Then you'll get my email, my phone number, and then you can even fill out a little contact form and I'll call you.
Would that page look like this, sir, above me?
It looks exactly like that. Yes, and that big green box up there at the top. Just click on
okay.
that.
The big one. It's screaming, "Press me, press me."
Contact. There you go. And you can put in a little message, email, even a time for me, the best time to call you, or you can email me, call me directly. And that is one thing that, amongst a few things that separates me from a lot of other companies. You're not going to be talking to a computer when you call. You're not going to be talking to an employee. You're going to be talking to me, the owner, every time you call about anything. So there will be no miscommunication on he said or she said, because you'll get the same information because it's coming from the same source.
So then, when people reach out to you, Mr. West, they're not going to be getting somebody else, or they're not going to be getting the Chat GPT going, "Hi, this is Mr. West Credit Service Office."
They will not. If I don't answer, you'll get a voicemail. Just leave a message and I'll call you back. But I'm the one that actually analyzes the reports. I put the disputes together. I'm the one that sends the welcome emails or the emails that give you the tips on how to optimize your scores. And you have access to me. I won't say 24/7, but if I'm available, I'll answer. And if I don't, you'll leave a message. I'll get back to you pretty quick. Because credit repair is all pretty much done the same. It's the follow-up, the customer service that makes the biggest differences now.
Well, I know you and I were talking in the green room earlier, and you said you had a little promo going on here if people were to fill out their contact information on your website here, and something about a consultation you are offering. We can get their credit reports. Can you get into a little more detail about that, please?
Yeah, if they have their own report, they can scan and email it to me, or you can go to annualcreditreport.com, get it there, download as a PDF, scan, email it to me, and I'll free consultation. I'll talk to you 10, 20, 30 minutes, whatever it takes to push in the right direction, enhance your scores. And if you need my services, that's great. If not, I'll find someone that can help you with whatever your situation is. Because not everything's solvable with credit repair. Sometimes bankruptcy or counseling's a better option. Just depends what's going on with you.
So you'll give people a consultation, a free credit consultation, and let them know one of the best paths they should take to resolve their situation that they have going on with their credit life.
Yeah, and ask whatever questions they've got, because like I said, it's not a one solution fits everybody the same.
Well, perfect. Well, I really appreciate having you on here, Greg. And I know we were talking earlier, and we were talking about coming up towards the end of the month here. We're going to be having you on again because you and I do a once a month news information show about what's happening in the world of real estate and mortgages as well as credit. So you will be joining us at the end of the month, will you not, sir?
I will be. And just a little teaser, we'll probably talk about this new medical debt that's allegedly not going to be on your credit report. They're banning it, but if you read the entire article, there is a provision that it may not go through. So we'll see. Maybe things will be different by then, but we'll check it out. That's the thing nowadays. You got to read past just the title of the article. You got to read the whole thing to see what's going on.
Now, Greg, people like to read just the headlines and go, up, I've got all the news. Or they turn on, the great news sources, Fox, CNN, MSNB, whatever it is.
Yeah.
Well, I appreciate you. And let me put you back in the green room and say goodbye to everyone. I appreciate y'all for joining us on another episode of Real Talk with Real Estate Pros. Catch us here Wednesdays at 11:30. And do me a favor, please. We're really trying to grow this show and provide a lot of great information to you on what's going on in the world of real estate, credit, and mortgages. Share this with your friends. Please go ahead and subscribe as well, too. My direct text number is right above there. If you know somebody who you think would be a great guest for me to have on the show, please reach out to me. Send me a text with their name and number. I would love to chat with them and hopefully have them on the show in the future. With that said, y'all have a great day and see you next week.
Recording stopped.